Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 17th of February, 2021. So here we are about 6:25 at night. The markets have reopened. You had a heck of a day in the dollar. It put on a strong rally on Wednesday. We're already in Thursday's session. Foreign currencies went down against it. Most of them getting a bid tonight. Not dramatic, but the metal markets are responding in a favorable nature. You can see that you're up again in the stock indices. You're up again in the energies. The API number came out friendly. And it's going to get friendlier, as you can imagine. We're losing so much production. We're talking 3.5 to 4 million barrels a day in Texas, the Permian Basin, that we are losing now. And we're consuming like mad where we can get the energy out to people. So you can imagine what this is all doing. Now remember, a lot of the refineries are still on coal, natural gas, and the like, and heating plants. So you always got to remember different things do different things in different ways. But when I hear that the technology, that the windmills is not there for wind and for the sleet, that is nonsense. It's been there a long time. Sweden has been using it for years. Now, many of the windmills in Texas are about 8 years old. That seems to be the average life of them. They have since then covered the propellers in carbon. You can cover it there, just like on the cars, the carbon fiber. Well, what will that do? That keeps it off. You can put heating units in them in a small way, but it adds, from everything I've read, about 5% to the cost. Okay, they didn't do that. What about the pipelines that are running? Well, for 10 years there's been talk about this. This is not something new. But when you don't have a problem, and you haven't had a problem for decades, you don't fix a problem that doesn't exist. Then you get what's called a 100-year storm or so, like we get in the Midwest, these 100-year floods, and they come in, and what you didn't prepare for all of a sudden is there, and the regulators get all over it. That's what you're doing. The problem is there's people involved, and they don't have water. They don't have heat. They don't have electricity. They don't have a way of life, and there's nowhere really to run. Even the heating centers are running out of it. It's terrible. Thank God Mother Nature's going to take care of it, and Texas is normally not a freezing place, and by the weekend they'll probably get above the 30s, but they got to deal with all this. You do realize you get to a city like Austin. I read that I think they have 2 snowplows. How do you handle this amount of snow they've got with 2 snowplows? Yet, you run a city, you have a budget of $180,000 a snowplow, you got other things to do. I understand all the sides of the argument. I don't have solutions, but that's a quick synopsis of what's going on there. On the weekly chart of closes on the S&P for the week, we're going into Thursday now. As of right now, we're up 2 points, or a 0.6 of a percentage point. Not much, but we're not down either. So the market has just stayed, and it's knocking on the door of all-time highs again. When we take a look at today's action, it doesn't look like much unless you were going through it. And from yesterday's high, which was 39.59 to today's low, which was 38.96. That's 60 handles. It's $3,000 on a futures contract. Each point, we call them a handle, is $50. So you got roughly 60 of them. Now the market's trying to come back up. Interesting. Has it given up anything on the chart? Well, let's take a look. So far, no. In fact, if you look at tonight, we're already through today's high. When I prepped this for you, we weren't. So I'll be taking this arrow and putting it under there. We have higher lows, higher highs. In terms of the swing line, you have to take out the lows of Wednesday to break the trend. That would turn the trend down on the swing line. Why? You'd then have lower highs, lower lows. Got it? Until that occurs, you're not there. What about the rest, the 18-day average? It's far away from the market. Therefore, it's not going to offer support in this area. It's got to be something else. We'll get to that. Where's the resistance? Up here at the upper Bollinger Band, which we frankly haven't hit from back here, which was back in January. May not hit it. There's other numbers that have been acting as resistance called window envelopes. I show that in my morning subscriber video, not here. This is the teaser to get you to become a subscriber to my research. But that's where you're at on that. And what about this? This is why it doesn't have to go back to the 18-day average. Markets that have what's called an embedded slow stochastic reading take what's called the K line, the red, and the value of the blue, and they go sideways for several days or more over 80. Until the red line gets back on a close under 79, I consider the markets locked in or embedded. And on the breaks, you've heard me say this, I keep saying it, that's where I think the pros are buying. Just yesterday I said there's a key moving average that the pros I think are buying in this market. And I put it out this morning for my subscribers. They heard about it at 5:40 in the morning. I start recording. So you can imagine it's pretty early. And I was telling them, well, the market did rally from that number as it turns out. In the NASDAQ, you broke the pattern of an uptrend. Let's just take a look at this. You had the pattern of higher lows, higher highs. You have the embedded reading. Agreed? You come down, you break the pattern. Is that bearish or bullish? It's immaterial. As long as you have the embedded reading in the hierarchy of indicators and what takes over, until that is lost, that's nice. It's a sign of weakening innately in the market, but it's not a sign, to me at least, that the trend is over. And to see the market coming back tonight, just the way it's at, not surprised at all. Let me come back here. I want to get to this one because I know I did that wrong. I wanted to just see where you're at. You haven't taken out yesterday's high yet, but you still have the embedded reading. So all I was doing was showing you this and brought it back. I hit the wrong button. Now in the Dow, kept the embedded reading, have kept the pattern higher and lows, higher highs. The bull trend is alive and well. Until it's over, folks, it isn't over. Now, admittedly, you haven't been able to get up all year of 2021 to the upper Bollinger Band. That should tell you there's another number stopping the market from getting there. It's called a window envelope. Again, I deal with it in my morning subscriber video. There'd be so many lines on this chart that you wouldn't be watching me. So in the morning I can do it because I push you in the morning, subscriber, to take the charting course. And once you take the charting course, all the numbers I show light up. And in fact, I reinforce them every morning and you get it very quickly. And people write me, that changed the way I look at a chart. And that's the idea, to give you a trading discipline and what it's looking at. Obviously, something's happening where you're not able to reach up to the Bollinger Band, but you're staying in an uptrend. What do traders see that you're not seeing? In the Russell, this is the market I'm now very concerned with. This market, while it's up tonight 5 points, if you're under 2250, I was looking at it earlier, probably 2252, you lose the embedded reading on the current pattern that the market is. Now those numbers will change a little bit as the day goes on and the trading range expands, but I don't think it's going to lose that. If you get under that 2252 level on a closing basis, you're probably going to lose the embedded reading. It never got under a 79, even at the low. I was watching it, so I know what I'm saying. And it's holding there. I need it under 79 to say, Ira, you shouldn't be playing this one. The odds are the market's going to try to make a run for the 18-day average, because that's often what occurs when you lose that reading. It's the strongest reading. You pull momentum out of a market, it likes to fall. There's one caveat, and that's the day after you lose the reading. It's the only day you can get it back in one day. After that, got to rebuild the whole process. So, you haven't lost it. The trend is still up. There's weakness in the market. This is my weakest of them. In the VIX, there was a problem. The VIX today never took off to the upside on the early break in all the stock indices. They were in trouble. They were down and down hard, yet you didn't go anywhere. I thought if you rallied, you'd see the resistance at the 18-day average. Instead, what has happened? You're keeping the embedded reading. This is noise then, these rallies. Until that's lost, the odds favor you're going to try to work lower. We'll see what goes there. T-bond market. Let's come back to Tuesday. Market's under the lower Bollinger Band. What are the odds of staying under the Bollinger Band? 5% of the time. I use a rule of thumb. Each consecutive close under it, like that's the first one, I now have 4% of the time that the market will stay under that band. Yesterday, what the market did, and that's Wednesday's close, we closed at 164.13, right over the lower band of 164.12. It is not a sign to buy. It is certainly a sign that, no, I'd be teaching you, you don't go short under bands and you don't buy over bands. Got that? I don't know why I have that. I just forgot about that one up there. But that's what I'm seeing in this chart. So in the chart, I have a higher high, and you'll see here, I'm giving you a bounce because now you've got the swing up. So you have no trend at work in terms of swing line. You had gotten under the Bollinger Band, and you've gotten a big bounce. And what I teach my traders is the first challenge of a Bollinger Band is where I think pros take a chunk, if not their position, off the market, depending on what's going on here. Now let's talk about that for a moment. You cannot count Thursday because we don't know where the market's going to finish, but I can count Wednesday. Both numbers finished under 20. Both were under 20 on Tuesday. Both were under 20 on Friday. I have an embedded reading. If the reading is lost by the red line closing over 20, I'll say it to you again, then my technique calls for price to try to make a run to the 18-day average of closes. If the market stays embedded, this is noise in an embedded reading, and there's, again, a moving average that I don't show here that I think the traders are going to sell short until that number's lost, and that's how I'm viewing it. Same thing happening in the 10-year notes? No, you're not embedded. You're just oversold in the market. It spent 2 days under the lower band. It's popping back up. That's what basically happened. Dollar index. You had a downtrend until today, but you were terribly oversold. See it? Any number under 30 is oversold. They have to be going sideways under 20 to embed, but if you get under 30 on either number, it's oversold. Lower highs, lower lows, couldn't quite get to that Bollinger Band. Interesting. Now, if you take out 90, 73 and a half, you break the pattern of lower highs, lower lows. And that's what you did. Now you have a lower low and a higher high. That is not a trend. So you seem to be waffling here, and now you can start looking and say, the market's stuck against that 18-day average, the line in the sand, not getting very far from it. It's the flip-flop in the euro. In the euro, coming into the day, you had higher lows, higher highs. Were you getting overbought? Yes. The converse is any reading over 70 is overbought. So I don't think you attract new buying power, and should you take out the low of Monday, you got a problem, and that's what happened. Where do I think support would come in? Probably the combination of the 100-day and the lower Bollinger Band. Do I think this market's attracting buying or selling? No, I don't think it's trending. British pound. Losing its embedded reading or not. It still has it. So these breaks in the market, I think, are being bought until the red line closes under 80. Trend is up. Resistance, the upper Bollinger Band in the market. Bitcoin, still very much with that embedded reading. So as you get up here and you pull back, there is a moving average in there. You want to see it? Become a subscriber, and I'll show it to you. It's every day what we're doing, and I cover this in the mornings, but it's still very much in an uptrend. It is not ahead of itself. It's not trading on the left-hand side of that upper Bollinger Band. Lose the red line, I think you get a correction. Don't. You can just keep grinding as you pull down until that's lost. I contend the pros are continuing to buy, and they're pumping out, I think, at the upper band. The differential between Brent and WTI, it went from under that number last week, and now it's all the way up here. So that tells you something's going on in the marketplace. You would think that WTI, because of the storm, is jumping all over the difference to the Brent. It's not what's going on. It hasn't done that, otherwise it would be falling back. That's when the difference narrows on the two. And that's because Brent is trading at 64.97 and American oil 61.76. So if our prices were jumping more, that differential would narrow in, and as it narrowed in, you'd see it down there. You're not seeing that. So little caution through that. All right? What do you think the Saudis are going to do at their March 4th meeting now that you're sitting here near $65 a barrel. I am not saying they'll flood the market, but if I'm Saudi Arabia, what I'm doing is saying, gee, I just took off the market 800,000 to 1 million barrels a day, gentlemen. Unilaterally, I want to put some of my barrels back on. We shouldn't upset the cart. You can all put something on, but I get the lion's share of putting more on than you. Do you think that's going to go on in that board meeting? I'll let you figure that one out. WTI, well, you can see the problems we're having. I don't know. I'm not an oil pipeline expert, but I'm hearing that some of these pipes, it's a serious issue. I don't know how fast they get them fixed. You can't overcome Mother Nature if the pipes get so cold that everything coagulates inside of it and you can't move things, you know, be it natural gas, be it crude. I mean, there's problems as you're moving things in extreme cold. And again, I'm not the expert on it, but I'm reading about it and I'm seeing what they're saying. So you keep going. Where does the market, with the embedded reading, by the way, before this all happened, you had your embedded reading. So it's not that the market wasn't bullish. It was trading over the upper Bollinger Band. It then dropped to it. This is February 10th. We are now at the 17th. This is a week ago. The cold weather just hit 3 days ago. So keep that in the back of your mind. But when you have an embedded reading, what's going on? The pros are stepping in and doing something. They keep buying it and you're not losing sight of that. So if you think the chart setup happened because of the cold weather, very wrong. It was there well before that set in, this 100-year storm. Now we know that we're getting in the heating oil, the big demand for it. Okay, we're seeing that in gasoline and, of course, nat gas. So you got to decide when they say, hey, weather's going to break, things can get back to normal X period of time. It's a futures market. Be careful. It might correct on you at any point. But generally, I look for the indicators to give me a warning about them. One of the other things that I do all the time is I look at my indicators, and some people look at a rune as an indicator. What it's really about is price and time. So price, is the market moving like in an uptrend, making higher highs, and over what length of time? Is it widening or narrowing as that's taking place? Is the trend getting weaker, stronger? I explain it using the indicator in a video series that is totally free to you. If you'd like to see it, just go to our website, www.iraepstein.com. In order to get it, you'll see free offers. That's what you've got to sign up for. I'm not just letting you go on the site and see it. If you don't like it, you won't get it. And under there, fill out the info. We will send it to you. I'm Ira Epstein. You have a good day. I will talk to you all tomorrow.